There are people like that doing crypto staking right now, but most people don't even know what it is or how to use it to make money.
What if the biggest battle shaping finance over the coming decade isn't stocks versus bonds, but artificial intelligence versus crypto? By 2030, one of these forces could dominate how money is created, transferred, and managed. But the truth is, it won't be a clean, winner-takes-all fight. It'll be a clash, a convergence, and a redefinition. In this video, I'll walk you through which force is better positioned to lead, where their strengths and weaknesses lie, and what's likely to happen by 2030. Stick around, because if you understand this war, you understand the future of wealth.
Right? I mean, that's the engineering. I give you the upside, you have no downside, and I pay you a dividend while you wait to get rich. Okay?
Foundations of power at the heart of dominance is infrastructure. Artificial intelligence is powered by massive data, compute, and algorithmic models. Crypto relies on networks, consensus, and token economics. Over the next decade, whoever builds more robust foundations in data centers, energy grids, security, and scalable architecture gains an edge. Artificial intelligence already capitalizes on cloud infrastructure, GPU farms, and algorithmic tooling that major tech firms control. Crypto, on the other hand, is building decentralized networks, layer 1 and layer 2 scaling, and token ecosystems that reward network participation. By 2030, dominance may go to whichever side can maintain reliability, trust, and growth under stress. Speed and adaptability in markets. Markets move fast, and adaptability is gold. Artificial intelligence has the upper hand when it comes to reacting to change. It crunches real-time data, learns, optimizes, and evolves. Crypto markets, though volatile, are slower to self-adjust because they depend on human decisions, governance, votes, forks, and consensus mechanisms. So artificial intelligence systems can seize opportunities, hedge risks, and reallocate assets more fluidly. That speed advantage gives artificial intelligence a distinct shot at dominating active finance functions, trading, arbitrage, predictive models, while crypto might excel more as a backbone for value transfer rather than tactical decision-making. Utility and value creation. Dominance doesn't come from hype, it comes from real utility. Artificial intelligence already powers search, recommendation engines, fraud detection, automation, and enterprise productivity. That means it directly drives economic growth in multiple sectors.
Look, I don't want to minimize the issue. I think there are a lot of consumers that have been hurt in crypto. FTX blew up. There's been, ICOs that were...
Crypto's value comes from decentralization, censorship resistance, tokenization, and new financial primitives, as DeFi NFTs, on-chain identity. Over the next decade, the question will be which side delivers more tangible value to everyday users, enterprises, and government. If artificial intelligence continues to embed itself in core infrastructure, while crypto remains niche or fragmented, artificial intelligence may claim more real estate in the world economy. Trust, security, and governance. That control is built on trust. Artificial intelligence systems have a big vulnerability: opacity. They are often black boxes with hidden decision logic. Crypto, in contrast, builds security and auditability into its design. Transparency, immutability, and decentralized governance. That gives crypto an inherent advantage in environments that demand verification. However, artificial intelligence is evolving. Blockchain layers are being used to make AI audit trails, and hybrid models are emerging that combine the strengths of both. The force that nails secure, verifiable governance, whether pure crypto, pure AI, or hybrid, will be the financial backbone by 2030. Capital and investment flows, money flows where returns and promise are greatest. Right now, artificial intelligence is attracting massive capital firms. Nations and VCs are pouring billions into models, compute, and infrastructure. Crypto is also receiving capital, especially in token projects, DeFi protocols, and blockchain scaling. But it's more speculative. If artificial intelligence continues generating consistent revenue, enterprises will favor it. Crypto will need to show sustainable usage beyond speculation. The side that locks in predictable, recurring revenue streams will likely command the larger share of investment over time. Regulatory institutional support. Regulation makes or breaks dominance. Governments are watching both fields closely. Artificial intelligence's regulation will revolve around privacy, data access, control, and ethics. Crypto's regulation focuses on securities, money laundering, custody, and tokens. Institutions like banks, funds, and governments may favor whichever framework is clearer, safer, and more adaptable. If crypto can win favorable rules equals for tokenization, digital assets, defeat, it gains ground. But if artificial intelligence is regulated in a way that gives it legal backing or priority in public infrastructure, it might edge ahead. Dominance will be strongly influenced by which side wins regulatory trust. Scalability and cost efficiency. To dominate, you must scale cheaply. Artificial intelligence's cost is heavy compute, energy, and data. But as hardware improves, chips get more efficient, GPUs scale, specialized AI processors emerge, those costs drop. Crypto's cost is consensus, block validation, transaction fees, and scaling layers. Many blockchains are still struggling with congestion and high fees. If crypto networks don't resolve scalability challenges, they may be too expensive for mass use. Meanwhile, artificial intelligence may scale more efficiently in server farms and cloud networks. The side that reduces marginal costs faster will have a clear path to dominance. Network effects and ecosystem strength. Dominance often comes through ecosystems. Crypto already benefits from network effects: more users, more apps, more DeFi protocols, more liquidity. But artificial intelligence also has network effects: more data fee, more usage, better models, more integrations tier, deeper entrenchment. Over time, artificial intelligence could bundle into every app, device, and service. Crypto's advantage is that value flows through its network's SEVU tokens. But if that world becomes too fragmented, too many blockchains, too many token standards, it limits reach. The force that consolidates or bridges ecosystems, AI or crypto, will gain a massive head start. Synergy and convergence are the question. Might not be which wins, but which merges best. Many experts believe the future is hybrid: crypto enabling trust and decentralization, artificial intelligence providing intelligence and automation. For instance, blockchain could give auditability to AI, while AI optimizes crypto protocols and trading. Predictions suggest that the intersection of artificial intelligence and crypto could add tens of trillions in value to the global economy by 2030. In many ways, dominance could come from those who master the convergence, not purely AI or purely crypto, creating the wealth machines that combine intelligence with value movement. Risk, failure, and resilience. No system is flawless. Artificial intelligence faces risks: model failures, bias, overfitting, data poisoning, and regulation backlash. Crypto's risks include consensus attacks, governance capture, and regulatory clampdowns. The side that survives shocks, adapts, and rebuilds while retaining trust will dominate. Resilience includes being decentralized, not concentrated in a few providers, transparent and flexible. Crypto has the built-in advantage of decentralization. Artificial intelligence needs to decentralize more to compete. Over time, the winner is less likely to be the one with perfect systems, but the one that endures failures and evolves. Adoption by real-world use cases. What matters most is real adoption, not speculation. Who uses it for payments, identity, supply chains, governance, finance, healthcare, or logistics? Crypto is aiming at payments, tokenized assets, decentralized finance. Artificial intelligence is already in everything: healthcare diagnosis, supply chain optimization, customer service, predictive maintenance. If crypto can break into everyday real-world systems, else payments, identity, ownership, it's got a shot. But artificial intelligence has an earlier head start in delivering direct utility. By 2030, the side with more real users doing real tasks will be the reigning force. The likely outcome by 2030, it's unlikely that one side fully wins. More likely, one side leads in certain domains while they fuse in others. Artificial intelligence will dominate the back-end modeling, decision logic, and automation of finance. Crypto will dominate the trust layer, digital asset movements, tokenization, and permissionless systems. The real dominator may be crypto for AI, ecosystems, intelligent financial systems running on decentralized architecture. Those who understand both technology, not just one, will shape the financial world of tomorrow, and they're the ones to watch and become. By 2030, artificial intelligence and crypto won't just compete, they'll collide and converge. One might dominate parts of finance, but the real power lies in mastering both. Whoever builds the infrastructure, trust, usability, and resilience will steer the next era of money and value. So don't bet solely on one side. Learn both, experiment, adapt, and stay ahead. The future isn't AI or crypto, it's AI with crypto. If this gave you clarity or shifted how you see tomorrow's finance, hit like, share, and subscribe. Let's keep exploring the forces redefining wealth together.